Now everybody is talking about gold and silver, so let's go back to that. I follow them closely. Let's have a look at the weekly chart. I'm looking at October 22, so I'm just looking at when that rally really started. October 22, it's been a very strong bull trend for 3 years. What I am trying to do is isolate this area here. So yeah, 17th of August, we were around 3,300 and we've now got up to 4,050 since the 17th of August. What are we now? The 10th of October. So we're just short of 2 months and we've gone up 30%. Huge. To the daily chart. What do we do now? This move, when you actually look at it on the weekly chart, it looks what we call parabolic. The market has rocketed 7 green candles in a row on the weekly chart. So that's 7 weeks of gains. But look at the big candles. You don't get that often. Look, this was a great bull run, but the candles were not as big as these green candles. This is rare. And it's what you can often call a parabolic move. When markets move parabolically in an almost panic buying situation, that can signal the end of the bull run. It's the last investors jumping into gold, thinking they've missed the boat. They want to catch the move, and they're all jumping in at the last minute when all the clever money's getting out and the dumb money's getting in. Now, I don't know for sure whether that is the case, but it looks characteristic of that sort of parabolic move that you often get at the end of a bull run just before the market starts to collapse. Right. I'm not forecasting a collapse, and I'm not in the prediction game. I'm in the finding tradable levels game. And right now, I'm going to stick with buying into weakness. I think we'll probably see weakness, but it's more likely to be a sideways consolidation than an out-and-out collapse in prices. Now, the sideways consolidation might build a reversal pattern, but it's more likely to be a battle between bulls and bears here, or at least between people taking profit and retail investors jumping into gold at a late stage. This is my guess. We'll see if I'm right in the days and weeks ahead. We do have good support at 39.54, which is actually where we're trading right now. Let's have a look at that on the 4-hour chart and try to get a better perspective. We've got the Fibonacci level at 39.54. You can see we tested it on the 4-hour chart with a low test candle. That confirms it's a good support level. Matches previous low here from that red candle. So the fib level is holding. We've got the 50-day moving average. That's the white line you see here. It's kind of hidden below my trend line. So we've got trend line, 50 period moving average on the 4-hour chart, 23.6% fib, and a low test candle. Now, the trend lines come in around 39.40. So a break below 39.40 and you'd want to be out of a long position. The support level around 39.55 seems to be holding. This looks like a really good support level to me here, around 39.90. Yes, it's broken the trend line, but it's a confluence of Fibonacci levels that I have previous all-time highs as well. We should be quite oversold on the 4-hour chart, at least by the time we get there. I think that would be the next level. Now, I never suggest selling into a short position in a bull market. That's just crazy. But in this case, after this bearish engulfing candle, I think I would almost be tempted to sell into a short position on a break below, let's say 39.30, and see if I can grab a profit around 39.00, 39.9, 38.90. These are the big levels for the day: 39.55, 38.90, 38.80. Those are the two big support levels. Let's move on to silver. I put all my fib levels on the silver chart. And what's that giving me? Well, firstly, look, note this bearish engulfing candle on the 4-hour chart. That was a big move. We hit a new all-time high yesterday, actually. That's something I really need to show you. This is very relevant. Weekly chart. Now then, monthly chart. Silver beats the previous all-time high of 49.51. Yesterday, we got to a new all-time high, 51.20. So we beat it by a significant amount, but we couldn't hold the break above. Now on the daily chart, you see this big high test bar, very long upper wick. We closed up on the day, but just below 49.50, which was the previous all-time high. That's not something you'd expect in a market that's expected to continue to push higher in a strong bull trend. So that is a worry. Why did we not close above the previous all-time high? In fact, why did we not even close above the previous day's high, which was 49.52, matching that all-time high? So we've closed below the previous day's high and the all-time high. Not the most bullish signal. Now, I'm not saying the market's going to collapse, but we do have a very big bearish engulfing candle here. So we've got a bull trap. Anyone who bought in these two candles on the break above the all-time high is now sitting on a loss. So these guys are going to be pretty nervous and unhappy. We tried a recovery, but again, we're pulling back. Short term, this doesn't look like the most bullish scenario to me. And certainly, as I've said, there are going to be some longs out there getting a little bit nervous now. Why did we not close above the all-time high? Right, I've got 48.55 as a support level. Now you can see that that's already worked, so that's interesting. But I've got it as a 50% fib and I've got a trend line. So not really surprising that that is holding. And we've got all this previous price action here where we struggled. So if I was to do that, we've got intersecting trend lines just around here, which is 48.40. So anywhere from 48.55 down to 48.40 looks like a good support level, and it certainly has held so far. But it looks like we could be coming down to retest it. Now maybe on the next retest it will give way. It's held for quite a long time. Maybe it won't hold forever. So a break below 48.30, 48.25 is going to take us down to 4800. Now that could be a better support level because it's a longer term 61.8% fib. It's the 50 period moving average on the 4-hour chart. There is a swing high here, which is pretty relevant because it's the top of a bearish engulfing candle. So to me, that looks like a pretty good buy area. Bulls have not given up. They will be looking for bargains in silver moving forward. Next week, we might find that the bounces can't retest the all-time high, and we might start to build lower highs and lower lows. I think that's probably going to be the case. So we'll just have to wait and see if I'm right. If we start building into a head and shoulders pattern or a descending triangle, we'll know that's a more negative outlook. So just watch that. Especially 48.00, 47.90. That should be the crucial support area. And if we close below there today, it's the weekly close, I would be more concerned about downside moves in silver. Next week, what will change my neutral outlook for gold and silver? A weekly close above the all-time highs we set yesterday. I would be surprised if that happens. I just think the price action is telling me now that the market is exhausted and it will stall, trade sideways, maybe even drift lower. Okay, that's it. We'll see if I'm right. Good luck if you're trading today. Have a great weekend, and please join me again on Monday.